I'm still in USD CHF. It literally just passed my take profit about 15 minutes ago. Price is still melting. We're currently up $17,000. I was gonna close out of this trade at around 0.87680. So we're already 6 pips below where my initial take profit was. I think I'm just gonna go ahead and close out of this trade here live. I'm not gonna keep holding it. And I actually just made a video on my Instagram talking about this trade, but I had no idea it was actually gonna come down this far and this fast. I entered in 30 lots on this trade. I don't have any swap on this because it's not even technically a swing trade. I was willing to turn this into a swing trade because I believed it was gonna take a lot longer for this to move down the full 40, 50 pips. But as you see, price has moved down. I'm still holding just a little bit more just to see if I can squeeze out some more profit. But from what I'm seeing here, we're approaching the support. I'm up 17K. I might as well just close out of it right now. So I'm glad I'm out of it, honestly. It was an amazing, amazing trade. So I'm gonna explain the exact strategy that I used to catch this trade, because honestly, it's not very complicated at all. Anyone who's telling you that trading has to be complicated is overcomplicating it themselves, most likely, because if you just look at this market, we can see that we were in a bullish market structure. So the main theme of this strategy is going to be finding out where the market is moving, which is called market structure. So the trend in this market structure at first was bullish. So we're making higher lows and higher highs. The market's consistently going higher and higher until we reached this resistance up here at 0.88582. Once we reached that sort of resistance, then price started to go down and form lower lows and lower highs. The second that happened, that is a market structure shift to the downside. I took a trade at this resistance. I'm not sure if I made a YouTube video on it, but I do know that I took this trade right here at this resistance, had a stop loss slightly above this high right here. And I did catch a nice scalp, but I didn't keep holding it because I wasn't sure that the market structure had shifted. And that's how we get to where we are right here. Because right here, the market does confirm that we are bearish. So this move down right here, this strong bearish move down, indicates that the market is indeed bearish because of the strength of the move. We can see multiple engulfing bearish candles showing us that the market is very strong to the downside and that the sellers are in control of the market. So on top of that, we also have an area of resistance that used to be support that price is rejecting off of. So let me go ahead and show you that. First, it was a support area in the past, and it actually used it as support here on Monday. And then recently, today, during the London session, price rejected right off of it, using it as resistance. So you take that into account, and also the fact that we're rejecting off of this 50 moving average, that's an extra confluence to make the market go down. And if we get a little bit closer here, we'll see that these two candles right here off of this resistance area have a big rejection wick to the upside. That's a clear indication that the market is going to reject a resistance and go in the opposite direction. So when you see those type of wicks, whether you see them on a support area, as we saw here, or a resistance area, as we used for this trade, you know most likely price is going to reject that support or resistance area. Vice versa. It works both ways. So that's a confirmation. The moving average is a confirmation. The change of market structure is another confirmation. The resistance is another one. And the strong movement down is our fifth confluence for this trade right here. There's at least 4 to 5 solid confluences to take this sell right here. And once I saw this bearish engulfing candlestick in profit, I knew that this was going to be a winning trade. And even when price slightly retraced close back to my break even, I was not worried at all. And I held my original stop loss. As you guys saw in my MetaTrader, I did not have a stop loss physically placed on this trade because I was monitoring it the whole time. But the second that price would have broken above that moving average, I would have already started to consider closing out early. But for sure, if price would have broken above these wicks and these highs right here, I would have closed out. So what does this strategy really consist of? It's market structure and a shift of the market structure. So the best times to trade is when there's a clear direction in the market and then it shifts to another direction. Here's another clear example that happened just last week on the same exact pair on the same time frame. This happens very, very frequently. We had a bullish market structure to the upside, very clear because it's a strong trend, so anyone can easily spot this. And then we had our high. Price did not end up breaking this high, but at the moment, we don't know that that's going to happen in real time. So what do? The number one thing we want to do is identify when new highs stop forming. Because if you're in a bullish trend, you're supposed to continue to make new highs. The second that new highs stop being formed, that's your first indication that the market is going to reverse. Your second indication is once you form a new lower low, which in this case is this one right here. So I'm going to circle in yellow the two hints that you can get while watching this market in real time that it's going to reverse and change the market structure. It's this lower high and this lower low. Once you get that, then you can start looking for your sells. And once you get some type of confirmation, entry confirmation, such as bearish engulfing candlesticks and or ideally both, a rejection off of a resistance area. In this case, if you would have taken the sell right here, it would have been right around the moving average, so it wouldn't have been beneath it. So all that simply means is that the moving average would not have been a confluence in this trade. You can still take the trade. It just means you're not using it as an extra confluence. But in an ideal scenario, it would be below. And I'm sure if you go on the 30-minute or even the 15-minute time frame, you would have that confluence. As you see, it's actually perfect on the 30-minute time frame on this position right here. I did not take this position, but it's just a good example of the strategy itself. You would take the sell right on that bearish engulfing, place your stop loss depending on how conservative you want to be. It could be just slightly around here, 17 pips. You target down here. You catch your nice 1 to 3 risk to reward ratio, and you call it a day. You call it a day once you feel like you've captured enough of the move. And as you see, if you would have kept holding this move, you would have caught 1 to 7, 1 to 8, 1 to 10. You know, the possibilities are endless, but I don't usually like to hold past like a 1 to 4 max. But that's the exact strategy you want to use. You're looking for market structure, and then you're looking for a clear market structure that you can say with 100% certainty, the market is bullish or the market is bearish for sure. And it also has to be a market structure that anyone can see that it's a clear trend, because that just means it's the most obvious trend and it actually is a clear market structure. Once you have that, you're not going to take the trade in that direction. You're going to wait for it to change and shift into the opposite type of market structure. This is a perfect example right here. As you see, we keep finding these examples. We have a bullish market structure that then shifts into a bearish market structure. We're looking to capture the sell. We're looking to capture the second half of the market structure because it's very, very easy to predict it and to identify when the market structure shifts from a bullish nature to a bearish nature. So that's the exact strategy. Tell me if you want me to go more into depth into the entry confirmations themselves. But for the most part, you are looking for rejections off of your resistance, support, big wicks, moving average confirmations, engulfing candlesticks, and a couple of other ones that I can take into a separate video. So I hope you guys enjoyed this video, and I will be seeing you guys on the next one.